Hey, what's up, traders? John Halhi. Hope you guys are doing well. It's a morning time here on a Saturday morning. Just finished doing my trading and having a really good think about this long-term view, or think about what's happening with my trading right now. How I've been trading over the last 10 to 15 years now. It's about 13 years I've been involved with the markets now. And my journey and all those different things that has actually happened. And one of the biggest mistakes that I have made in my trading journey, and I fall short of that from time to time, even still to this day. And I think about that because the last few weeks, the last few months, I've done phenomenally well. But this week here, I've had a bit of a rough patch. And there's only one reason for that. And that is this: trying to force things. Now, trying to force things is obviously bad, but the one thing that I had a phenomenal last couple of months, December and majority of January, I had a really good couple of months there, really good couple of months. And the biggest thing that I was doing was I wasn't trying to force myself to the finish line. Every time I try to force it, every time I try to rush it, I get into trades that weren't exactly that I was after. I put too much money on a trade, and I just stumble all over myself. And that was one of the biggest mistakes that I made this week, but I make from time to time, and I'm trying to come to you guys and try to help you along your journey. The most successful people on this planet, they have that view where they want to be, and they simply just take their actions every single day. And you'll notice when you don't force it, when you don't rush it, when you just say, you know what, I'm only going to wait for that perfect setup. I'm only going to put this X amount of percent on my account every time. I'm going to be good with my stop, and you just do the small details every single day. It's those smaller details, right, that make the big moves. I said, the last 2 months have been phenomenal for me. I had about 50% return on my account in the last 2 months. Now, I'm not going to say anything about that, with what you're doing and stuff like that. I'm not saying you're going to do that. It's definitely a hard thing, but I added so much there. But this week I gave, about 10 to 15% of that 50% growth that I gave that back this week. And the only reason why I did that was because I started doing things that I don't normally do, which was buck into my plan. And the reason why is because I was trying to force things to make more money a lot quicker. And what that ended up doing was actually sending me going backwards. Instead of just being patient, waiting for it, and watching my account slowly grow, and it, boom, and I hit the microphone. You know what I mean? And so from that process, guys, I look at my trading, and I look at you guys that are trading. I look at you that are trading right now, and I see that trading is the most difficult thing on the planet. The reason why, it's not the trading itself that's hard. It's ourselves, right? Like, I have a plan that works, but sometimes we just buck that trend, don't we? We just want to get off that trend. We buck it. And so one of the biggest mistakes that you can make is trying to force yourself to the finish line. When you force it, you rush it, it actually takes you longer. And we see this in everything here, right? You can't rush building a massive skyscraper, right? You just can't rush that. You got to make sure you do the right steps. And one thing I've found is that it's such a weird thing, it's a concept, because we're fearful of not getting success. We're fearful of not doing this. We're fearful of not working out. So what we focus on, we actually attract into our lives. It's like, I'm fearful of this not working out. I'm fearful of this not doing well for me. And it's like, and then we just rush it. And instead of just sitting back, relaxing, taking really good quality setups, waiting for the market to come to us, not taking okay trades, but taking exactly what we're looking for, and then just going with that. And it's really interesting that whenever we do those smaller details every single day, I'm trading X% on my account, I'm going to be good with my stop, I'm going to stick to my plan every single time, I'm going to have my trading pattern. I trade options, so I'm going to have X amount of days left in the option. I'm going to be trading this type of option. I'm going to trade this much money of my account. I'm going to get out of the market for a loss when this definitely happens, and so on and so forth. When I do those things and I stick to it, especially getting into trades that I should only be getting into, man, my account just takes off. And then I go through one of these egotistical phases of I'm better than the markets. And again, guys, like, I'm not, please, I'm not worried at all about what happened this week, right? And I'll be honest with you guys. I just took trades and I doubled up and I did things that I shouldn't really do for long-term success. The reason I'm doing it is because I'm trying to rush my success even quicker. And it just doesn't work like that way. Have you ever done that? And the main reason why, there's 2 or 3 trades that I got into this. The reason why I got into it is because I wanted to make money, and I started to double up, and it was just like, and whenever I doubled up on a trade, bam, it smacked me in the face really quickly. I did 3 times. I doubled up on 3 trades this week, and every single trade was a loser. And I look back over the trades, and they weren't good quality, clean, amazing setups that I normally take. Every single one of those. The only reason I took that because for some reason I rationalized in my brain, I made some bullshit story of why this is an amazing setup, and boom, we got into it, right? And leave some comments in the chat box, or I know you guys have been there before, right? Like when you do that and you make some story up, and then when you get out of that trade, you step back for after a few days, you go back to that trade, say, why the hell was I in that? The market was doing this, the market was doing that, and so on and so forth. You know what I mean? And I was like, I shouldn't have been in that trade at all. I shouldn't have been doing that. I shouldn't have been rushing it. And isn't it interesting? The long-term view, and I've noticed as I was talking to this, with my partner yesterday, and I was talking with her about this concept of just doing what we need to do every day and having faith that the right setups, the right things are going to fall into place if we do our actions every day and not trying to rush it and force it and overdo it. You know what I mean? Like, you can't force success. When you force it, it's like trying to grow a rose or a flower. If you water that sucker too much, guess what's going to happen? It's going to drown, right? You can't water it. You've got to give it water, bit of sunshine, bit of time, and then suddenly a rose blossoms over time. But what we do, right, we want to force it, we want to rush it, we don't have that long-term view. And so the biggest mistakes that sometimes we make, and even I made this week, was not having faith in that long-term process. And so, you know what, I'm only taking these perfect setups, and if I only took those perfect setups, I would have had a phenomenal week. There was one trade that I didn't take because I was in these other losing trades. That didn't really meet my plan 100%. Again, again, as I said, this is just something I'm being honest with you guys. But as I said before, I made 50% of my account, I gave 10% of 15% of that back. So I'm still doing good overall. My equity curve's still going up, but it just went up like that. It went straight up like that, and then I had a bit of a dip. And so it went straight up, whoop, 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 a little dip. Now it's got to go back up again because I'm back on track again. So the equity curve's still going well. But the thing is that when we start to force it, when we start to rush it, right, those mistakes that start to come up. And whenever we do that with the markets, whenever we force that with the markets, it's just such a thing that really just knocks us off, and it stops us from having that success in the markets. It stops us from moving forward in a big way with the markets. And when you're trading, the biggest mistake that you can make is trying to force it, trying to rush it. The biggest lessons that I've learned from my mentor, and I learn from time to time again, is just wait for those setups. It's like, oh my goodness, that is an amazing setup. That's exactly what I'm after. Boom, in, done, good trade, But whenever we try to force it, when we try to rush it, we make those mistakes. And whenever we create some sort of story of why we should get into this thing, isn't that incredible? Every time we create this story, this looks good, and we start to draw our trend lines, and we start to make some rational bullshit story of why we should get into this thing. And then we get so intruded into this trade, which is not even a setup in the first place, that we start to talk ourselves that this is the thing that's going to explode. Let me double up and double up and double up. And bam, the market, it's like, oh, God damn. Happen again. You know what I mean? And so if you want to be successful in the markets, one of the best things that I see from my mentor, and I see my mentor, he makes millions of dollars a year. He trades the market anywhere from 12 to 14 hours a day, every day. He trades 1-minute charts, 5-minute charts, 60-minute charts, daily charts, and also weekly charts. Not so much weekly charts, mainly the 1-minute and 5-minute charts he will trade, and maybe even an hourly chart. But he trades all markets. He trades and also the daily chart. So he trades the daily chart on the Australian stock market and also US stock market, trades CFDs. He will then trade the currencies and also, futures contracts, oil, S&P, so on and so forth. But he sits in front of the screen. He's got all these screens going. But do you know, I looked at his, from getting coaching from him, again, he makes on average a couple of $100,000. Last month he made 220 grand. 220 grand. But do you know he sits in front of a screen about 60 hours a week? 60 hours a week. Call it 50 hours a week. That's 200 hours a month. Right? That's more than 1,000 hours. That's probably 1 to 2. He probably spends 1 to 2,000 hours per year looking and watching the markets. Guess how many trades he took last year? I think it was roughly around about that 70 to 80 mark. 70 to 80 trades. 70 to 80 trades, and he spent almost 1,000 hours plus trading the markets. That's discipline. Some days he'll have no trades at all, and some days he will have really, really good setups. And I admire that, because some days he'll sit in front of a screen for 12 hours and not take nothing. And he'll come back the next day for 12 hours and nothing. And the next day for 12 hours and nothing. He's so disciplined. But guess what? When he does get that trade, he's all in. Well, not like all in with all this money, but he's ready to pounce on that thing and take it. That's the reason that's the reason why he's got over the last 12 months, he's got a 92% success rate. Phenomenal trader. But as you can see, that what makes a successful trader is not the trading system. I had a friend of mine saying, give me the top 3 things that makes a good trading system. It's like, it's not the trading system that makes a good, everyone thinks that's, oh, this trading system didn't work. It's like, no, you didn't work the trading system. But I bought this course and it didn't work. I lost all my money because I bought this course, I bought this trading system, and I lost all my money. I can't believe he lost all my money. That person lost all my money. That company lost their money. Like, no one didn't lose anything from you. You're the one who signed up to it, and you're the one that didn't do your due diligence of doing your back testing, research, and building your confidence to make sure that, yes, it does work before you put your money in the market. And we all like to point our fingers, don't we? One of the best things you can do with the trader is say, you know what? Whose fault is it? Me. My fault, right? My fault. And so the more you can do that, the more you can start to move forward. And as I said before, it's not the trading system. Really, any trading system out there, what? If you have a good trading system, it could be anything. Wait for the market to come down to a really good support level, wait for it to bounce, have a 3-to-1 profit target, and then trade that. 2-to-1 profit target. You know what I mean? It's like, just trade that. I guarantee you'll do well. But just be disciplined every single time. We know that, right? It's not the trading system. Thousands of systems out there work. Reversals, trend continuations, all of. But there's only going to be one way that works for you. So a lot of people have this biggest myth, biggest theory that these biggest things out there that it's the trading system's fault. And it's never the trading system's fault. It's always us. We get involved with the markets. We understand that, right? We rush it. We force it. We start to take trades that we shouldn't do. And then we miss the trades that we should take that ran on for profit. The trades we shouldn't take stopped us out. Now we're going backwards. Now because we did that, that's actually that's damaging our confidence level. And so next week, now we're going to be very, very skittish about taking the next trade because we had a few losing trades, which we shouldn't have been in the first place, and we should have been in this one here, which actually did run on, which met our plan, and then it's a snowball effect. And then we don't take another trade because we're nervous. Then we do take a trade, and then that's a stop out. And actually, that stop out that met the plan. But if you just took all the plans, you actually had 2 wins in a row. Then you had a stop out, which was just part of the plan. It was just part of the win-loss ratio. You see how that just and it's not the taking the trades that you shouldn't take. It's not that, but it's the compounding effect that happens afterwards. And the only reason why we take trades is we're fearful that we're not going to see another good setup like that, like the last setup. And it may be a day or 2 or 3 or even a week since we've seen a really good setup. And because of that, we force it, we rush it, we end up going backwards. And then guess what happens? As soon as we start to take those trades, we watch this a beautiful setup just run away from us. It's like, oh, come on. So anyway, guys, there's a little recap for this weekend. Hope this helps you out. A bit of a mind sort of thing to look out with the markets. And let me know in the comments below, what do you think about trading and what do you think about the stuff that I said in this video today?